Alright, welcome to this teaching on market maker models. This is one of the most important frameworks you need to know in IST trading. And if you see this at the first time, this can be a lot. So I'm going to break it down step by step, A to Z, and then we're going to look at an example. The first step here, at the top, you need to have an original consolidation as your starting point. An original consolidation is when the market doesn't do anything. It's just going up, down in a small range. And you know the IPDA market cycle after a consolidation, you always have an expansion. You cannot go from a consolidation to reversals, always consolidation, expansion first. Then you need to look at two stages of distribution if you're at the sell side of the curve, accumulation if you're at the buy side of the curve. When you have an original consolidation, you go down, you expand downwards, distribution 1, distribution 2. Then when you hit a higher time frame, in this market maker buy model example, higher time frame discount array, then you need to look for a smart money reversal. And that's an aggressive sells, aggressive buys. And you had to use time frame alignment for the cleanest entry. So that means if this is a weekly discount array, look for a 4-hour market maker model. Is this a 4-hour discount array? Look for a 15-minute market maker model. And even for the scalpers watching this, if this is a 15-minute discount array, look for a 1-minute market maker model. Horizontal consolidation, sells at the curve, distribution 1, distribution 2, smart money reversals, sell, aggressive buy. And here the buy side of the curve starts. And how can you confirm if you are at the sell side of the curve or when you are at the buy side of the curve? And that is that in the sell side of the curve, premium array must hold. So the bearish order blocks, the bearish value gaps, the bearish breakers, all the premium array must hold. And if you've seen that smart money reversal indicating that we're going into a buy program, discount array should hold. So that means bullish value gaps, bullish order blocks, bullish breakers. And ICT talks about the silver bullet in market maker models. That's the second stage of accumulation or distribution, and that's the highest probability setup. So if you see this happening on your chart, the second in the market maker buy model, the second stage of accumulation is your silver bullet. This is your highest probability entry because you already know we're going for the target. That's the original consolidation. So make sure you're aware of this depiction. If you're struggling with bias, if you're struggling with finding high probability setups, looking at a higher time frame market maker model, so for example, a weekly discount array, 4-hour market maker model, you should be good. And then if you know you are in a 4-hour market maker buy model, you can go to the 50-minute to look for your entry models. So now let's look at an example of NASDAQ where this happened in a 50-minute discount array and a 1-minute market maker buy model. So here at the left side, there was a 15-minute bullish fair value gap. And let's do the same as we saw in the framework. We're going to mark out some stuff. So right here, what do we do here? We consolidate. This is our original consolidation. Then we go downwards. Remember, if order flow is bearish from a consolidation, we're going to an expansion. Consolidation, expansion. We have multiple stages of distribution here. Right here, right here, right here. And so many stages of distribution where price is just engineering liquidity. And what is very nice when you anticipate a smart money reversal coming up, the staircase effect, that are failure swings. In this whole move, there's almost no liquidity being taken out. All the swing highs are still intact. So that means when price changes from a sell side of the curve to the buy side of the curve, it's going to do that with ease. It's a low resistance liquidity run. So here if you're sell side of the curve, and now we reach into this 15-minute discount array, the bullish value gap. And then what you want to see is aggressive sells, aggressive buys. And if you want to confirm for yourself if this was the smart money reversal, it's just the PD array check. Do premium arrays fail and do discount arrays hold? In this case, aggressive sells, aggressive buys, with a value gap here, the bullish for value gap. If that doesn't hold and we go straight down, you probably have confirmed we're not at the buy side of the curve yet. Value gap 2, multiple times. And when you see this second value gap holding, that should be your green light that we probably are going to hunt for a market maker buy model with the target, the original consolidation. This is our money point, our liquidity point. So we want to take a trade somewhere in the buy side of the curve towards the target of the original consolidation. And what you will see here is that we do a few stages of accumulation until we reach the original consolidation target. So right here again, you want this kind of raise to hold. And now I only marked out for value gaps. But in a buy side of the curve, all the down close candles should support price higher as order blocks. So make sure you mark them out as well. Every single discount array should push price higher. And this is of course a nice little example in hindsight, but when you're watching this real time, you can validate or invalidate your setup. Because for example, if you're right here, and we start breaking down big time, and you see all the discount arrays failing, then that should hint to you that we're probably not going to reach the original consolidation, and we're just going to break down to make maybe a new low. So every time, keep an eye on your discount arrays. Are they still holding? These are your lines of defense. Imagine this as like a medieval castle fight or Viking castle fight, and here are all the buyers are fighting the sellers here. In the sell side of the curve, the seller army was really strong. They defeated all the buyer. All the castles are now occupied by seller armies. But this was the final battle, and now the buyers are in control. The buyers are taking over all the castles in the country. So when you see price breaking down, that indicates that some seller armies already are taking new castles, and probably the seller army becomes stronger and stronger, and we probably will go see lows. But you shouldn't expect it here in the market maker model. And why? We are creating high resistance structure right here. Why do we create high resistance structure? Because we sweep liquidity and then make a market maker sell model. That's high resistance liquidity. This whole price movement at the sell side of the curve is low resistance liquidity, the staircase effect. There's no liquidity being taken out. So in an ideal scenario, you want high resistance structure like this, backing your trade. That's your defense to trade higher in the market maker buy model. And we want to target easy liquidity that goes with speed. And that is when you see staircase effect and original consolidation. So here you see price trading a little bit lower. Here you should notice, okay, are we going to go lower, or are we just going to, did they want one castle to make a little liquidity sweep and then go up again? My rule of thumb is if I see 3 discount arrays in a market maker buy model failing, then I'm out. So this was the first. If we now do the second, then I'm on my toes, but it is only the second here. And after a few minutes of waiting, we finally have some displacement higher. And here we reach the target. So what do we see right here? Sell side of the curve. Smart money reversal. In a smart money reversal, after that, we want to see discount arrays pushing price higher. Rule of thumb, after you see the third discount array failing, you should anticipate that your trade is not valid anymore. Here were 2, but approaching the third castle, didn't make that, so the trade was still valid. And drawn liquidity was, of course, very clear. That was the market maker buy model. A little addition here, time. Time is more important than price. The smart money reversal happened here the Wednesday during Asia session, before Asia. So that means if you trade the London kill zone, this was your playground. So you went through the charts. This was already happened. This is an Asia expansion model. So it means this is your playground. So your entry was somewhere here, 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 or here. Because you knew already the buy side curve has started. We have a clear target. So buys and longs, all based on a 50-minute busy and a 1-minute market maker buy model. Thank you for watching this video. If you like this kind of videos, please like and subscribe. Make sure you check out the free Market Masters school community in the link below. Share it with all your trading friends, and I'll see you in the next one.